I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up this hour, a key milestone. U.S. regulators say Johnson & Johnson's COVID vaccine is safe and effective. It would be the first single-dose shot available in the United States. Plus, swinging for the fences, former Yankee A-Rod is getting into the blank check boom. He'll talk about his latest SPAC, the Slam debut, with us next. And wheels up, California air taxi startup Joby Aviation gets a little lift from Reid Hoffman and Zynga co-founder Mark Pincus. It's a spectacular Wednesday coming up. All those stories in a moment, but first, U.S. equities staging a rally as Fed Chair Jerome Powell again indicated the economy needs support. More on that, as well as chips and GameStop. I want to get to Ed Ludlow, who's been following all the latest. Let's talk about chips first and this executive order, Ed, from President Biden. What can you tell us?
Yes, President Biden has directed officials to act on the global semiconductor shortage. He warned that it won't be a quick fix. Part of the issue with the global shortage in chips is that a lot of the manufacturing is done overseas. Taiwan with TSMC and in Korea with Samsung. It's not done domestically, and building factories to make those semiconductors takes years and billions of dollars. But he spoke to the press earlier today as well and said that what's happened with this global chip shortage is that we've identified a real vulnerability in the U.S. economy and the U.S. supply chain. So he has acted. The executive order is signed. Not much activity really in after-hours trade, but the Philadelphia Semiconductor Index did rise 3.2% throughout the regular trading session on Wednesday. A lot of optimism that this action by President Biden would cause a change long-term in how the U.S. goes about securing its semiconductor supply.
So let's talk about financial markets more broadly. Big spike in GameStop today, closing at $91 a share. Walk us through the day.
It's just another crazy Wednesday. Another crazy Wednesday, Emily. Broadly, the market is looking at what's going on with the economy and vaccines, right? The S&P 500 up 1% after Federal Reserve Chair Jay Powell through his support behind the idea of economic stimulus, a fiscal stimulus to support the economy. You can see tech a little bit behind that, up by 0.8%, and the NYSE FANG Plus index down 0.3%. There's still investor jitters out there that as yields rise, there is concern about big valuations assigned to some of these tech names and a little hesitancy there. You can see as well the Russell 2000 index, that gauge of small caps, up almost 2.4%. On that Johnson & Johnson news, regulators pleased with the vaccine there. The idea that more successful vaccines being administered means the sooner we're out in the real economy spending money in those small businesses. But as you say, let's talk about stonks, shall we? Stonks. GameStop up 100% in regular trading hours. It's the biggest gain in 3 weeks. I thought this volatility was behind us, but there's a lot of activity on Reddit on Wednesday. People talking about the GameStop CFO recent departure. AMC, which was another one of the stocks that the Reddit traders were talking about, up 18%, modest compared to GameStop. You can see after hours as well that GameStop has continued those gains. I'm sure it's going to be a big story in the days to come. And I wanted to look at Bitcoin just really quickly, because what we're seeing is the bulls come back in, buying up more of the cryptocurrency and supporting the price. We were up pretty impressively earlier on Wednesday, lost some of those gains throughout the day, but we're hovering at around the 49,000 mark. MicroStrategy, which is the biggest corporate owner of Bitcoin, coming back to the market, announcing that it bought $1 billion worth of the cryptocurrency last week. Lots of volatility, big fluctuations in the price, but still big names, corporate names, being support, throwing their weight behind the cryptocurrency. Emily.
All right, Ed Ludlow, thank you for that roundup. Meantime, talking about that vaccine, U.S. regulators saying Johnson & Johnson COVID vaccine is safe, it is effective. This a key milestone on their path toward giving Americans access to the first such shot to work in a single dose. For more, I want to bring in Bloomberg's John Lauerman, who's been covering all the vaccine developments for us. John, what's different about this shot?
Well, hi, Emily. It's great to be with you. Yeah, as you mentioned, it is a single-dose vaccine. It's really the only one that's been tested that way, although the other vaccines, like the Pfizer vaccine, the Pfizer-BioNTech vaccine, and the Moderna vaccine, they've been looked at after a single dose. And in some ways, I would say the results from the J&J vaccine after one dose resemble the results of the other vaccines after a single dose. And it makes me think that perhaps we'll see more single dosing of these shots in the future. As you know, the UK is already giving out single doses of the Pfizer-BioNTech vaccine, and then waiting up to 3 months for a second dose, just so they can stretch those doses out, get more people more protection quickly. But overall, I'd say it's very good news. It shows that we can have a vaccine that's only going to be administered in a single dose, which is really a lot simpler. And also, this vaccine will be the first one approved in the U.S. that won't need to be frozen. The J&J shot only needs to be refrigerated, whereas the other vaccines need to be kept at very low temperatures, which
Wow, so
we've read about. Yeah, we've read about about shots sort of falling out in inappropriate times. People having to rush around with them and give them out on the street to people because they're falling out because the freezer went bad or something.
So these Johnson & Johnson developments then quite significant. I mean, how quickly will this shot roll out? How could it dramatically change the length of time of the overall vaccination process?
An emergency use authorization for this shot potentially over the weekend. An FDA panel is going to meet on Friday. There's a panel of external advisors to the FDA, and they'll determine whether or not they're going to recommend the emergency use authorization that's needed in order to roll the shot out. If it gets that recommendation, the authorization could come as early as Friday night, maybe over the weekend, and then the government said one of Biden's advisors on COVID-19 said today that there could be as many as 4 million shots rolling out as early as next week. So, and then let's see, Johnson & Johnson said that they could have, I believe, 12 million shots by the end of March, and then they have a contract to deliver 100 million shots by the end of June. So we can see these shots. There's you've probably seen there's all kinds of indications that shots are going to be rolling out from all these companies very quickly.
All right, fascinating developments, potentially game-changing. Bloomberg's John Lauerman, thank you so much for that update. Coming up, former MLB All-Star Alex Rodriguez looking to hit a grand slam as he joins the blank check derby to build the Yankees of SPACs. We're going to talk to him next. This is Bloomberg. The SPAC phenomenon continues. Former All-Star for the New York Yankees, Alex Rodriguez, aka A-Rod, has joined the lengthening roster of financiers, executives, politicians, celebrities, and athletes who've signed on to special purpose acquisition companies. SlamCorp began trading Tuesday and will now start scouting for a merger deal to enrich him and his investors. Alex joins us now alongside SlamCorp chair Himanshu Gulati. Gentlemen, thank you both for joining us. So, Alex, I'll start with you. We just heard some commentary from Charlie Munger, Warren Buffett's right hand, who said the world would be better without SPACs. Why do a SPAC and why now?
Well, I can't speak for the masses, Emily, but I can tell you this, that the SPAC world is custom made for us because we have deal flow coming out of our ears. The barrier to entry has been capital. And now with a SPAC, we level out the playing field and we can really have a big time competitive advantage and go out, and Himanshu and I through Slam bring a lot of value to founders and companies.
Interesting. Himanshu, what kind of companies do you want to buy? What kind of deals do you want to do, and with whom?
Sure. I'd actually love to answer, add on to what Alex said, because I think it's exactly right. When we think about SPACs, it's actually almost a democratic way for the retail and then certain institutions to get into an IPO before it happens. When you think about IPOs in general, they're given usually to a small subset or a subset of large institutional investors. So there's a lot of people and a lot of retail and institutions that don't get to participate. And for us, we think this is a great way for the retail community and then others to get in there early. And they also have a put at $10. So to us, we think it's a really interesting product, and I think one that's here to stay.
So
Emily,
Alex,
your
when you talk
question
about deal
yeah.
flow, yeah, well, that was my next question. When you talk about deal flow, Alex, you just mentioned there are so many deals coming your way. What kind of deals are you looking for? What is going to be an attractive target for this particular vehicle?
Yeah, look, we look at about 1,000 deals per year. About 300 or 400 of those we're the huntees. They're coming after us. They want to do business with us. Look, we like sports, media, technology. Anything we do is going to have a tech, should be the backbone of the company. And it's companies where we can get involved, tell the story, get involved with the founders. Himanshu or I, or maybe both, will sit on the board and be very involved.
So whose idea then was it to do a SPAC, Alex? Did the bankers approach you or vice versa?
I think Himanshu and I both wanted to do it. And, I was a little bit on the fence. I would only do it with someone who was best in class from an institutional point of view. Himanshu and Antara returned over 59% to their investors this year. They're backed by Blackstone. So you have the perfect storm between what I bring, social media, what I bring with my following, awareness, and then, Himanshu, one of the great investors in our game today. I thought 1 + 1, we were ready to do not only a SPAC, but to build a great franchise.
Now, Himanshu, Antara Capital has had quite a remarkable year. That said, SPACs, they have been controversial. I was looking at this study out of Stanford, looking at the 2019-2020 cohorts of SPACs, which found that returns were up 32% for the sponsors, but down 35% for post-merger investors. Is this really a good deal for the public?
So that's a really good question. When you look at SPACs, it's like investing in any other asset class. There's going to be winners, there's going to be good losers, there's going to be good SPACs, there's going to be bad SPACs. Thinking about hedge funds, mutual funds, all the different institutions, some fare better than others. And I think what you need to be able to do, there are a lot of SPACs out there, and this is why I think our SPAC is so special. You need to be able to pick and believe in both the management team, their ability to source a deal, and have an alignment of interest. And I think we, as Alex and I, and Slam Corp, we have all those ingredients to be very successful, where we believe our SPAC will come up with a great deal. To be fair, when you look at those stats, we were invested in certain pipes last year. A good example is QuantumScape. QuantumScape was the best performing SPAC of the year. It was up, I believe, over 700% and has actually maintained most of those gains this year as well. So I don't think not all SPACs are created equal, and not all sponsors and management teams are created equal. But I think what Alex and I bring is a best-in-class sponsor and management team to the SPAC world or the SPAC area, and I do believe we're going to be very successful.
Well, Himanshu, you'll be happy to know that the quantum space folks were actually on our show just last week. Alex, I assume it's called Slam because... Go ahead. Go ahead.
Oh, sure. I wanted to add one thing, and this is something that I think it shows how Alex and I both think about really working with, our team, with the companies we're involved in. Alex will give you multiple examples of how, he has really added value in names. But I think QuantumScape is a good example where we were anchor investors in the pipe there. And we became very close. Our firm became very close with Jagdeep. Alex got to know him as well. He's actually on our board of directors. So it shows the approach that Slam, Alex, and I are taking is very different than just being a financing vehicle. We actually are partnering up with the teams and really trying to add value along the way, hence why he's on our board.
So let's talk about the differentiator because, as I understand it, it's called Slam, Alex, because you've got the most MLB Grand Slams in history. Yet I know you feel strongly about this not being a sports franchise, despite the bid that you made for the Mets. What do you think the unique differentiator is then, Alex?
Well, I'll tell you, it's exactly what I learned from the best boss I ever had, Mr. George Steinbrenner, the owner of the Yankees. He told me, Alex, the three most important things to winning a world championship is team, team, team. So we have that in colors. When I think about Himanshu and his senior team, when I think about what we bring from a consumer, telling the story, being involved, hitting the retail market, and then our board that Himanshu mentioned. Don't forget we have Mark Lowry, who I believe is a top e-commerce guy in the world. Look at all his, from diapers to Jet.com to being the CEO of Walmart. His work at Walmart the last 4 years has been nothing short but incredible. So we're coming at you from many spaces. There's many ways for us to bring value, and we can't wait to get this party started, because the only bad thing about this is we can only buy one company.
You mentioned, you are the CEO, Alex. When you see some of these celebrities who are attaching themselves to SPAC, they're advisors. They're not in that driver's seat. And I'm curious, why be the CEO? I assume it means you're all in. And how does that rank on your sort of life goals, list of life goals?
Well, life goals, besides being a father to 4 beautiful kids and 3 girls, I think, look, I can't speak about other athletes or entertainers. What I can tell you is that being a CEO, I'm taking a primary, not a secondary or tertiary. I'm fully involved, and I'm fully involved with my time, my energy, my resources, and I'm all in. It's also the biggest investment that A-Rod Corp and me individually is going to make. Himanshu is going to make a significant investment, and we're going to be one of the largest investment in our own pipe, in our own investment. So we want to have complete alignment and full transparency.
Himanshu, since Alex mentioned Mark Lowry, curious how much tech in particular is really going to be the focus here. I know you're looking at it to be the backbone, essentially, but how much is that going to guide the decision that you make when looking for an asset?
Sure. So when we're looking for an asset, as we've mentioned, and you've mentioned earlier, we're looking for something in the sports, media, health and wellness sector with a tech focus. So we want something that's going to have a large total addressable market, one that's going to have high growth, best-in-class management team, but can be a disruptor in its industry. So in most cases, that involves a technology of some sort. So I do think we're going to end up spending most of our time in terms of speaking and looking at companies for acquisition candidates is something that has a tech focus and is a technology within those industries. So that to us is most attractive right now, because the world keeps evolving. We think about it, pre-COVID to now as we're coming out, what is the world going to look like? I think technology is going to be what's going to be pushing innovation, and that are going to be the better investments going forward.
Well, and talk about evolving, Alex. I know you've been investing since you were a young baseball player, building up a pretty sizable portfolio. Do you have a take on Bitcoin or a thought there, given that it's the latest craze aside from SPACs?
Yeah, my take is I don't understand any part of it. I've been reading some articles and getting up to speed. But one thing, again, going back to what Warren Buffett, my mentor, taught me, stick to your needing, stick to your circle of confidence. And then that's fairly small. We like to go really narrow and deep, not wide and shallow. One of the things that brings me a lot of optimism about SLAM is, we have over 30 to 35 companies in our portfolio. 6 of them or so we're taking public this year. Hims and Hers has been a phenomena. It came out at 1.6 billion. It went over $3 billion in market cap. We have Archer, the flying cars. We've had Wheels Up, and there's a couple more coming. So we're very excited. We're poised. We've learned our lessons from the good, the bad, and the ugly. And look, we don't want to make any assumptions. We're coming in here with eyes wide open, and we don't want to replace wisdom with a bull market. So we understand things are very expensive, but Himanshu and I are going to be extremely disciplined.
Himanshu, do you have a Bitcoin take?
So we're not involved in Bitcoin. I think it's an interesting quandary at this point. It's obviously gone up 200% or whatever it's exactly up for the year. And it's a question of store value. As the U.S. continues to print dollars to fund the COVID, issues around COVID and funding the government and individuals, I do think that there needs to be other stores of values. I think Alex will tell you, we both had to talk about baseball cards, something that's near and dear to me. That's a store of value that's actually outperformed many markets and many individual stocks over the last 20 years. So I understand the use for Bitcoin. In terms of valuing it, it is something that's difficult for us to know exactly what the right value is. So similar to Alex, it's one we're just happy to stay on the sidelines for.
I did read in your background, Himanshu, that you sold a young Alex Rodriguez baseball card back in the day when you were a blooming entrepreneur. Alex, before we go, you tweeted that you were praying for your brother, Tiger Woods, waiting for more news. Have you heard from him, or is there anything you'd like to say?
No, I've just sent him a note of good wishes. My prayers go out to him and his family. And obviously, we're praying for him and a safety, speedy recovery.
All right. Alex Rodriguez, SlamCorp CEO, and Himanshu Gulati, SlamCorp Chair. Thank you both. We'll be watching to see which company you scoop up. All right, much more on Bloomberg Technology after this quick break. Stay with us. This is Bloomberg. 2 weeks ago, Reddit said it had raised more than $250 million in a private stock sale. Turns out it was a lot more. The social media platform said in a filing it raised $368 million in preferred stock, and it's targeting $500 million. Reddit's valuation stands now at more than $6 billion. All this happening just as it became the focus of that stock trading frenzy. And coming up, sales at the veteran toy maker Mattel on the rebound thanks to classic brands like Barbie and Hot Wheels. Now investors are eager to see if Mattel can adapt its product line to the digital era. My conversation with Mattel Chair and CEO Ynon Kreiz next. Also ahead, the latest on Cathie Wood's main ETFs declining today and her decision to buy the dip in Tesla. We'll evaluate. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Veteran toy maker Mattel coming off a banner fourth quarter, beating street expectations on strong consumer demand as parents turn to iconic brands from Barbie dolls to Uno cards to keep kids engaged at home through the pandemic. I spoke with Mattel CEO Ynon Kreiz. On the heels of the company's Analyst Day, he relayed how he plans to keep the momentum going.
We really saw growth across the entire portfolio in all three power brands, Barbie, Hot Wheels, and Fisher-Price in the fourth quarter. We grew in 6 of the 7 categories where we operate in all 4 regions in constant currency. The dolls category continues to do so well, led by Barbie. Barbie was the #1 overall toy property globally, both in the fourth quarter and the full year. And the Barbie Dreamhouse was the #1 toy in the US also for the fourth quarter and the full year. American Girl also grew, was up 9% in the fourth quarter and continues to do well with very strong growth in our direct-to-consumer business. And like that, vehicles category was up double-digit. Infant, toddler, preschool category was up with Fisher-Price Core up double-digit. Our challenger categories continue to perform well. And all in all, it was really a comprehensive performance across the board for our product offering.
Barbie's having her best growth moment in 2 decades. What's driving that in particular?
It's so much to do with the Mattel playbook. This is really going back to to how we create product, how we think as a company. It's about brand purpose, cultural relevance, design-led innovation, and executional excellence. And we apply the same approach, the same methodology, the same capabilities, the same authenticity across the entire portfolio. And this is why we're so confident about the progress and momentum we're seeing in our product offering.
We're covering tech here on a daily basis, and I'm curious what sort of tech toy innovations you're piloting, given how we're seeing technology increasingly integrated into toys.
Well, it's really important to meet the needs of today's consumers, and children and families are looking for new and innovative ways to play and learn. We believe technology should be used to enhance, not replace physical toys, because traditional play has its own important benefit and values. Connected play is part of our strategy and how we extend the reach and engagement of our brands in the marketplace. We have some really great examples with the Talking Thomas and Percy train set that meet on the track and talk to each other. Pictionary Air, which really reinvented the classic game in a quick draw game by using AR technology. And the Fisher-Price Click hands-free Baby Gate, which features a wall-mounted button that opens the gate with a child-proof press and a slide system. So we leverage technology to enhance our product offering, not to replace, but in addition, as a complement, and it's all working as one system.
As a parent, so many of our kids have been exposed to a lot of screen time this year. We're worried about the long-term impact of that. I'm sure you're doing research in this area. What is that research telling you about how we balance the physical and digital worlds?
Yeah, so children do spend more time in front of screens, but many families and most parents still recognize the value of physical play. As a company, we have a clear mission, which is to create innovative products and experiences that inspire, entertain, and develop children through play. Parents care about quality product. Parents do care about trusted brands, quality brands that mean something, that has a value, that have purpose. And with that, we really see how our product is resonating so well. All really part of our purpose as a company to empower the next generation to explore the wonder of childhood and reach their full potential.
You've also got a prolific original content arm, many television shows in production. What's your angle to compete with the likes of Netflix and Disney?
Well, we don't compete with Netflix. We partner with Netflix. Mm-hmm. Netflix is one of our important distribution partners, and we collaborate with them on many important projects, just like we do with other distributors and streaming platforms. We recently made a few very exciting announcements with Mattel Films and Mattel Television, including an Uno live-action film in development with Grammy Award-nominated rapper Lil Yachty, an Uno game show in development with Propagate, a Whack-A-Mole game show also in development with Fremantle, and the Thomas & Friend All Engine Go series, which will expand distribution with Cartoon Network and Netflix, which both will air the series starting this fall with international distribution partners to be announced shortly. In addition to that, we to date announced 11 films, 11 motion pictures in partnership with some of the greatest talent of our generation. These are really exciting projects, all based on our iconic franchises. We're seeing a lot of interest, a lot of passion in attracting really industry-leading talent and making really good progress on these projects on the creative side, and can't wait for these projects to come to the big screen or streaming platforms.
My conversation there with Mattel Chair and CEO Ynon Kreiz. This week's tech sell-off took the shine off Cathie Wood's ETF lineup, with investors pulling a record $465 million in a single day from her flagship ARK Innovation ETF. The fund sliding for a third day Wednesday, even as Tesla shares rebounded. Wood told Bloomberg earlier this week that she bought the 13% dip in Tesla, but the fund slid for yet another day, despite Tesla going back up. Here with the latest, Bloomberg's cross-asset reporter, Katie Greifeld. Katie, how unusual is an outflow like this from Cathie Wood's funds?
It's very unusual. I mean, if you think about Cathie Wood, she almost has a cult following at this point. You know, you can actually buy ARK hoodies and baseball caps, and you've seen that enthusiasm reflected in flows into her funds. I mean, the ARK Innovation ETF, for example, it saw inflows of $9.6 billion last year, and it has taken in another $6.2 billion so far this year prior to this rout. And what finally broke the streak was really just a pullback in the fund's performance. It had rallied so much in 2020, but finally we saw that rally cool a little bit. And a lot of that can be blamed on Tesla. I mean, it's the fund's biggest holding, over 9%, and it's been a very volatile week for the car maker. And you've seen that show up in the ARK Innovation ETF's performance. It's still down over 9% on the week. And now you're seeing some of those investors who had piled in start to look for the exit.
So is this just a hiccup or a sign that investors are really looking for a prolonged ARK exit?
That's the big question now. And of course, one day of outflows doesn't make a trend, even if it is a record. But even prior to today, there were some signs that you were starting to see bears gather around the ARK funds. I mean, if you look at IHS market data, you can see that short interest on the fund had risen to about 3%, which doesn't sound like much, but it is a record high. And you have to consider that short interest was basically zero coming into 2021. There were a lot of believers in this fund. So we'll see if, you know, the bears win out here, if we see that bearish interest build. But I do just want to note that even with this week's rout, you still see ARK Innovation ETF up almost 12% in 2021. And if you compare that to the S&P 500, it's only up 3.6%. So there's still a lot to like about ARK, but it's definitely hitting an air pocket of sorts here.
Interesting. All right. Well, we'll continue to follow this. Bloomberg's Katie Greifeld with the latest on Cathie Wood. Thank you so much for joining us. All right. Coming up, more on the GameStop surge. We're going to speak to a longtime tech investor who calls the stock market a, quote, gambling machine, and Robinhood, a new form of addiction. Esther Dyson joins me next. This is Bloomberg. GameStop is on the comeback trail, surging over 100% after the news of CFO Jim Bell's ouster in a disagreement over strategy. This 5 days after executives of Robinhood, Citadel, and Reddit testified before a House panel about the recent retail trading frenzy that sent stocks, including GameStop, on a wild ride. To discuss, we're joined now by Esther Dyson, a longtime tech investor and executive founder of Wellville, a nonprofit working to reduce health disparities in the United States. I want to start with GameStop, Esther, because you made some pretty provocative comments about Robinhood recently, asking whether they should be asking themselves about whether they're democratizing a new form of addiction. What do you think Robinhood, what kind of responsibility, I should say, do you believe Robinhood bears here?
I mean, you know, the same responsibility a company that sells alcohol bears. It's not illegal, but there are a lot of people who, you know, some people use alcohol to have a nice Friday evening. Other people use it as a way to sell life insurance. And then some people use it to get relief from something that can't be relieved by drugs or by gambling or by alcohol or anything else. And the vendors of that need to understand what they're doing. And the more they make their product addictive, it's addictive. Let's get real. Addiction is not about the substance. It's about the behavior pattern of the person who gets addicted. And they're looking for short-term relief. I believe
Robinhood would probably push back on that and say we are democratizing investing. We are making this accessible to people who have never invested before, many of them women. What's your response to that?
Maybe some people shouldn't be investing. You know, if you don't have the money to spare, if you don't have the ability to risk it, you shouldn't be doing it. It's like not everybody should be drinking alcohol either if they have a tendency to get sucked in. You know, we talk about, is the market a voting machine or a weighing machine? But for some people, it's a gambling machine. And that's happening to a lot of the stock market right now. It's quite distressing.
Interesting. You know, you've been a tech investor for a really long time, and I wonder if you're seeing the same kind of frenzy behind the scenes. There's so much interest in technology, but not all of the companies pan out, especially at the angel and early startup stages where you're focused. What trends are you seeing?
I'm seeing a lot of interesting trends. I mean, on the one hand, there are the SPACs, which is another form of gambling, if you like, but most of that is done by people who can afford it. I mean, that's very different. But if you don't have the ability to take those risks, you're being sucked into something. There's a lot going on in digital health right now, which is exciting because digital health is cheaper than a lot of the sort of physical infrastructure and people having to travel and the difficulties of getting infected with COVID and so forth and so on. There's huge demand, but there's going to be consolidation inevitably because there's 20 or 30 companies doing almost anything you can mention, whether it's at-home COVID tests or mental health counseling or nutrition management. All these things are valuable, and as an investor, an angel investor actually has the ability to help make the company more successful. Later on, the investor is more in the job of picking unless they're a direct VC firm. But right now, you're seeing some firms get capital. Often they're well connected rather than necessarily well run. And it's an interesting time. I'm making a bunch of investments myself. I'm very interested in democratizing access to mental health support.
Mm-hmm. Now, speaking of the biotech sector, you used to be on the board of 23andMe. They're doing a SPAC. Curious if you think that's the right move. We were just having an interesting conversation with A-Rod, Alex Rodriguez, amidst this controversy about with some folks saying that, life would be better without SPACs. That just coming from Warren Buffett's right hand, Charlie Munger, today.
I think the quality of the company matters more than whether it's a SPAC or not. I think anything that becomes a fad tends to, bring a lot of stuff along with it. 23andMe is a real company with real data that's doing real research. And so, I think that the reality is SPACs kind of streamline the ability to go public. And if it's a good company, that's great. If it's not a good company, then, be wary, just like any other investment.
Right. Now, you also have invested heavily in aerospace, and curious, with the successes of SpaceX, the quest to Mars, where do you think we should be placing our bets? What should we be watching in the space race now?
We should look carefully for good management. There's a lot of interesting space startups. They tend to be run more by engineers. Often some of the biotech companies are run by scientists who are not necessarily the best managers. But I think ultimately, health and healthcare on Earth is really important. So is kind of our human destiny to travel to Mars and elsewhere. I mean, it's half a joke, it's half real. We need a backup planet. And personally, I hope to retire on Mars. Not too soon, but eventually.
Really? Why?
Elon, I'm ready.
Why do you want to retire on Mars?
When you get really old, 1/3 of Earth's gravity is actually really handy. You can stand up straighter because you don't weigh as much. And as I said, I want to retire several decades from now, at which point, with luck, the place will be ready for me. And one-way trip, it's a pretty boring long trip. So no, I want to go there when I don't really want to come back, and maybe I'll just be watching Netflix the whole time. Who knows?
All right. Well, we will pass on your readiness to Elon Musk.
Thank you.
Esther Dyson of Wellville, longtime tech investor. Thank you so much for joining us. All right. Still ahead, making air taxis a mainstream reality. Tech veteran Reid Hoffman taking Joby Aviation public in another SPAC deal. We're going to hear from Joby's executive chair next. This is Bloomberg. LinkedIn co-founder Reid Hoffman's SPAC company reInvent has agreed to merge with Joby Aviation to take the electric air taxi startup public. The deal will value the combined company at $6.6 billion and is expected to close in the second quarter. Joby will list on the New York Stock Exchange. Joining us now for more, Joby's executive chair, Paul Sciarra. So, Paul, you know, the air taxi isn't on the market yet. You're still working on it, and it's a few years out. So why do a SPAC now?
Yeah, so for us, Emily, and first of all, thank you for having me on. We're obviously really excited about the news today. And part of it is about the deal and the transaction, but actually part of it is about where we stand on development. In addition to the announcement today, we're also releasing new flight footage of our vehicle kind of moving through the full transition on board. And we put more than 1,000 hours on that vehicle, and we're feeling really good about the performance of it. It's hitting all the numbers that we set out to hit: the range, the speed, and the overall capacity. So for us, this felt like the right time to put some more resources on the balance sheet, but even more importantly, because we felt like we were ready from a technical standpoint, we had a clear path through certification, and now we had the opportunity to really march down the set of milestones that would get us to commercialization.
So let's talk. We've been talking about the SPAC controversy almost for the entire hour. We were speaking with A-Rod about his SPAC plans earlier. You know, there are folks out there who say these are companies that are not necessarily ready for prime time. What's your response to that?
I think that from our perspective, sort of delivering on this requires a few things. It requires making sure that you have the right vehicle, making sure that you have the right manufacturing, and in turn, making sure that you have the right capability to begin to launch commercial service. And from each of those perspectives, we felt like we had the right ingredients now. As I mentioned, you know, the vehicle is doing what we want to do, but even more importantly, we've got a deep partnership with Toyota in order to execute on the manufacturing plan. And we've got a team now from Uber Elevate that we acquired just last year that's going to give us the opportunity to roll into commercial launch. So from that perspective, we felt like, hey, things were right in terms of the things that matter in terms of building this business to kind of make this transition to a public company.
So what are the nearest term use cases? Like, when will it be ready to take me across the bay to work?
Yeah, so the range on the vehicle is really wide. So we really think about it as suitable for really any trips between 5 and 150 miles. So that might be your daily commute, but it might also be connecting cities to nearby suburbs or even to other cities that are also nearby. So that's a pretty wide range of use cases. When we think about an example about like going across the bay, that's obviously a perfect example because, as you know, in San Francisco and the broader Bay Area, there's lots of really difficult geography that you have to navigate that creates some bottlenecks for congestion, whether it's the Bay Bridge, the San Mateo Bridge. And vehicles like ours have the opportunity to dramatically decrease people's commute time. So we're really excited about being able to roll that service out in select launch cities in 2024.
Now, look, there are dozens of other companies trying to do what you're doing. One of your competitors recently had a battery fire. There are regulatory hurdles. There's the cost. You know, why are you so optimistic this will be a mainstream reality? And will it be for everyday people or just for billionaires?
Yeah, so there are a few things sort of baked into your question. And I guess what you can say is that, or what I can say is that we kind of started with these priorities. First, we wanted to ensure that the vehicle was incredibly safe. Second, we wanted to make sure that it was incredibly quiet. It's actually the noise profile that, for the most part, limits the operations of helicopters and small planes in and around cities. And then third and finally, we really started with a unit economic model to make sure that the vehicle, given its specifications, could deliver progressively lower cost service over time. And our intention, sort of outlined in the plan today, is to really start at a price point that looks more like Uber Black, but then quickly drive down to the cost of Uber X. And we think that all starts with getting the vehicle technology right.
Interesting. All right. Well, we'll be following latest developments. I'm looking forward to my ride in 2024 or later. Paul Sciarra of Joby Aviation, thank you so much for joining us today. And that does it for this edition of Bloomberg Technology. Bloomberg Daybreak Asia is coming up next. I'm Emily Chang in San Francisco. This is Bloomberg.